Book. Our mission here is to be a bridge for new and advanced traders to go beyond outdated market narratives into deeper understanding. We offer market insights as timely analysis of what's moving the markets right now, trading education to help you build real skills beyond surface level tips and tricks, and live trade ideas, real-time recommendations you can act on immediately. Opening Playbook is a free daily live webinar. Your hosts of the show are Nathan and Graham. Nathan has over a decade of experience trading Forex, stocks, and beyond. He's worked with dozens of leading global experts on strategy development. He's obsessed with math and systematic edges in trading. He's the creator of the Income Machine, overnight options, and more. He's a husband, a dad of 7, and the publisher here at the pub. Graham Lindman is also an options expert with over a decade of market experience. He studied technical analysis under 2 of the top minds in finance. He developed wrap order option trades for cost-effective entries, as well as created lightning trades, moonshot alerts, NVIDIA Elite, Apex Indicator, and Newton. He's also a husband, a dad of 2, and the copy chief here at the pub. Now, a lot of people in the stock market education industry will tell you that trading is easy if you just know their quote-unquote secrets. Well, that's not us. We'll tell you the hard truth, which is that trading is complex and takes time to learn. But we make the learning process much easier. The Opening Playbook exists because a lot of traders have trouble succeeding because they believe many of the myths out there about the market and trading. We'll dispel those myths and equip you to become a better, more trader, giving you the opportunity to be more successful, whether that means using our systems, tools, and strategies, or just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. Now, it's important to remember that you should never trade with money that you can't afford to lose. Of course, nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please don't trade with money that you can't afford to lose. And let's be ultra clear, any type of trading involves losing some of your trades. It's inevitable. Controlling your risk will keep you in the game, and we can help you learn structures and strategies to do just that. Our promise is that we'll be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we believe you should always follow. And here are some rules of the road to get you started. Stay calm, try to trade without emotion involved in your decisions, go at your own pace, don't try to keep up with us or other traders, and ask questions freely. We really do want to help in any way that we can. And to help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner I'm posting above. And for answering that quick survey, we'll give you custom content to better help you by using your feedback to improve our classes and education, and give you a free options cheat sheet, a digital, easy to understand options guide that will look something like this. Now, I'd like to give you some tips on using our webinar platform before we get started with our regular program. The button next to number 1 here, we call the hamburger button. That will collapse the green column on the left, and you can leave it collapsed because we don't use it for anything. Number 2 is the pause button. You can pause and resume the presentation whenever you'd like. Number 3 is the mute button. You can mute and unmute the presentation's audio. If you find that you suddenly lose audio during the presentation, make sure you haven't accidentally clicked or tapped on the mute button. Number 4 is the main announcements section, where trades that we take in the current session will be posted, as well as helpful links that can always be found there. Now, this section will only be visible if you're on a large screen. If you're on a mobile device, you won't see announcements here, but we do have another area that you can see them that we'll get to shortly. Number 5 is the toggle for going between light and dark mode, whichever you prefer. Number 6, the monitor icon will enlarge the presentation area without hiding the communications or chat area. Now, this button is shown in 2 places, and I highly recommend using this because it'll give you the best view of the presentation without hiding the chat from you. Number 7 is the picture in a picture button. This will reduce the presentation to a floating window so you can do other work behind it, such as go to your broker platform on a mobile device. Number 8 is the full screen icon. This button will issues such as buffering. Number 10, all the way on the right, is the communications area. This is where group chats, announcements, and private messages will appear depending upon the tab that you have selected above. At the bottom, number 11, is where you'll type your outgoing message. You can press enter or tap or click on the green arrow to send it. Number 12 is where you can start a private message to a host by tapping or hovering on one of their group chat messages and clicking the double speech bubble icon that appears. Now, you can only private message hosts, not other attendees. At the top, number 13, that button will collapse the communications area, giving you a larger area for the presentation, but you won't see any of the communications that are going on. Number 14 is the group chat. This is where you'll read and write messages that the entire group can see, and this is the default tab that you'll see when you sign in. Number 15 is the announcements button. This is where you can see those same announcements that were in the larger area that we covered earlier, but this will be available whether you are on a mobile device or a larger screen. Number 16 is the private messages tab. This is where you can see any conversations that you have started with the hosts or they have started with you. And if you have a new message waiting for you, you'll see a red dot below this icon in the toolbar at the top. And last but not least, number 17 is the button that will pop out the communications area into its own window. This is useful if you have multiple screens and you want to go full screen on the presentation and view the chat in a separate screen. Now, we have a version of this guide that I just went through that you can view on your own. The URL to get to that guide is marketspg.com/wisepub, and there's now also a link to it in the announcements section. And that's it. So once again, welcome to Opening Playbook. Don't forget to complete that survey to get your free cheat sheet. And now we're going to play our theme song and get to the regular show at the top of the hour.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The Markets Playbook is finally here. is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk side. Options and plays in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk side. Options and plays in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh. Step by step they break it down. No confusion, no spinning around. With every trade they set the tone. Making big calls on their trading phone. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Well, good morning, everyone. Welcome to the opening playbook for Friday or Friday, April 24th. Hope everyone is having a good morning so far. Graham will be with us momentarily. We are going to talk about how we're wrapping up the week, what the outlook is going into the weekend, and we're also going to get our Friday gold trade, our weekly gold trade, and then we'll have a nice lesson in spreads. So, a couple cool things in store for y'all. We have the market trying to figure out whether it's up or down today. Not quite sure what it wants to do.
Yeah,
Here's
what a
Mr. Graham.
hey David. What
Hello,
a
sir. How are you?
awesome pre-market. Oh, doing great. Happy Friday, everyone. Happy Friday. What an awesome pre-market pop we had. I don't know if you guys saw it. The Nasdaq went up like 1.25% this morning. We faded a lot of that since then. I mean, we're up 1% on the Nasdaq still. Tech is roaring. I don't know if you guys saw Intel,
Yeah.
AMD, insane.
Was it 15% or something like that?
Yeah, I think Intel went 30%.
Oh, did it really?
It was 15% yesterday, and we woke up this morning 30. I don't know where it's at now. Let's see. Until 23% now. But we have faded a lot of those gains. Let me ask you guys in the chat right now before I share my screen. How are we all feeling this week? Is anyone caught off guard, surprised, getting nervous again, getting excited? Let me know in the chat.
I can understand how people would be hesitant to let the greed in.
Yeah.
Just a little hesitant, but
Let me do this.
and when the market's super greedy, then we tend to get a little bit suspicious and move toward the sell side, right?
If you guys were here, let me just make this all aligned. If you guys were here Tuesday, we just had a crazy run the last couple weeks, but looking at the data, looking at the numbers, this is where I hate this enhance this slide thing on Google. It annoys me.
Yeah,
Um,
that arrow is like darn near perfect.
I know, and it's not always, I try to be about 70% right. That's a pretty good number. Uh, this is for me personally, it's playing out exactly as I'd hoped, at least. Obviously, don't get me wrong, I'd love the markets to be up 1% every single day forever. That would be pretty awesome. But we know that's not going to happen. So if you guys came Tuesday, you should know that this was exactly playing out as expected so far. Consolidation. Now, I know people are nervous, they're fearful, getting cautious, uncertain. Someone said yesterday's flash crash was interesting. Here's the thing. Since this, since Tuesday, or we'll just go since this high here, has the market gone down at all? I mean, maybe a couple ticks, but everybody I'm talking to right now is like, man, what a tough week it's been in for the markets. We've been completely flat. So while sentiment is shifting back to the other side, which is good, that gives the bulls a breather, a chance to regain their, refill the gas tank before the next charge higher. In my opinion, we haven't given up any ground. Maybe just a couple ticks.
Yeah, I think the hard part is people feel the peak to trough of the wicks.
Yeah. Oh,
Really,
the
that's not where
volatility's
the
still
market
there.
is.
Yeah, the volatility. You were right about that. The volatility is still there for sure. But all in all, to me, this is like the perfect breather. I mean, my arrow here is actually a little bit down.
Yeah.
We've gone pretty much flat. Now, this is my next slide I have for you guys. Or actually,
Uh-oh.
this one, let me go here first. I had a note Tuesday. I believe we're going to leave the dip buyers behind. What I mean by that is a lot of people were saying, oh, we had an insane run. We'll probably see it pull back and then we'll buy again. I could be wrong. We still have a lot of big earnings names coming up. I do not believe we're going to see a pullback to the 100-day or 50-day moving average. I believe we're just going to see consolidation before the melt up phase continues going into May. And I'll show you again. I'll just remind you guys of those charts as to why I believe this. But again, I'm getting excited right now. And I think anybody waiting on a big, big pullback will get left behind. Could be wrong. Obviously, this is not financial advice. It's my opinion. And here's one of the reasons why. We like to map out, let me go back a slide. We like to map out how the tech rally compares, the AI rally compares to the .com rally back in the 90s. It's been near perfect. October to February, chop, chop, chop. March, April, sell off, going into May, red hot. Also, if we look at our charts regarding the new Fed chairman coming in. So right now, this is April. Pretend you see April here. We're a little under a month out from the new Fed chairman coming in. This is typically a very bullish window for the next 45 days. A little consolidation, bullish. There's one more chart I had for you guys.
Is there such thing as a lame duck Fed chair? Is that a real thing?
Yeah. Last thing here, we saw the VIX collapse. And if you look at how the markets respond post VIX collapse, 1 month up 86% of the time, 2 months, 3 months, 86% of the time, 93% over 1 year, 100% of the time the markets have been up. And this has happened, 15 times, we'll call it. Roughly speaking, actually maybe a few more than 15. So for me, I'm very, very excited, very, very bullish right now on the markets, even though we're taking this breather this week as we kind of anticipated so far. We have not seen a massive dump. We haven't seen the value switch back. So I'm very excited. Let me just say that. Hard to make money with 60-minute. Yeah, I think with 60-minute, I don't know if it's hard to make money. I just follow the rules, knowing that over time, it adds up really nicely. I think you guys know that too. I would love to win every trade. We had 3 losers in a row unless you traded XSP. Then you had 1 winner this week. But I just keep on trading and keep following the rules. All right. That's my spiel for you guys, since I know I received a lot of messages the last couple of days of people saying, man, this sell-off this week is terrible. And I just want to remind you guys that we haven't actually seen a sell-off. We just, like David mentioned, we're seeing volatility. We're seeing these big wicks. Your account's probably swinging. But to me, this is very healthy consolidation, ideally before our next run up. All right.
I think I missed 60-minute XSP yesterday by a penny.
Oh,
Because you said it got hit, then I looked and I'm like, oh, it's still in it for. I think you were out at like 75. I had it for like 76, and I
oh
never got
no.
filled.
Yeah, that's a bummer. Yeah, I saw it hit and I'm like, okay, SPX is next. It got to like 46%. And then if you guys saw what happened yesterday, it was just again, the volatility in this market is pretty crazy. Got right to 46%. Looked like a normal retracement to go back higher. I didn't see any news, but that was pretty ugly. Pretty much put us out of the game yesterday. With
Yeah, I
that said,
think
let's go ahead and look at gold. Of course, gold is shooting higher this morning. It's a Friday. Why would it not be? For our gold income trade, I'm going to go a little bit more risk on here. Again, knowing that this is a typical consolidation before what could be the next leg higher. We've got a month for it to play out. We can probably get around 1-to-1 risk to reward ratio right here at the 100-day moving average. Key level of support also supported by this gap recently. So right now our number is 434, 435 range. Let me flip over to gold. Now again, if you guys, let me just ask the crowd here, and this is going to be a trick question. You guys know we normally do the income style trades where I do the bull put credit spreads. If I'm going aggressive, I'll do calls instead. Same idea. It's just the difference of when you may get exercise. I try and give us the least possibility of getting exercised early on the case of puts. So if I'm going to be trading here, let me ask you a question. If I'm going to trade the wrap order on gold here, which is what I'm going to look for right now, am I going to use calls or puts today? And I know a whole training on this, so hopefully somebody came and paid attention. If I'm going to wrap the price of gold right now, calls or puts. Now, as a reminder, it's going to be roughly the same risk to reward. All right, we got a mixed bag. Oh, oh, 50-50. All right. Okay, here we go. Calls are taking it. And there's no I appreciate you guys posting. Whether you posted put or calls, I love the engagement. As a reminder, let me go see if I can find that gold training deck. Ignore this slide. Let me go find the slide as a refresher. Here's the enhances
Diane, I
slide.
believe we're up to May 22nd, but we'll find out in a minute.
If we're trading conservatively, if we're going deep in the money, I use a credit spread with puts, bull put credit spread. Why? Because our risk of assignment or being exercised early is minimal. We can also let it expire for full value without paying any closing costs. But if we're going at the money, which we're doing today, or if we're going to go out of the money, we're going to use a debit. The reason being, if I were to use puts today and gold dips on Monday, the put I sold may be exercised against me, which is going to guarantee a full loss. I don't want that to happen early. Even if we have another couple days of consolidation, I don't want there to be risk of someone outside of my control giving me a full loser when we still have tons of time on the trade. So when we wrap, we're going to use calls. When I say wrap, it's just an at the money debit spread. Can I repeat that? I'll repeat it one more time.
I'm typing it out, but you can.
Okay, cool. If I'm going in the money, so like here, if we normally have been trading gold where I'm going well below the price, saying I, bet it could go higher, flat, or fall. And I normally get about 20% or so, 17 to 25%, roughly speaking. I use a bull put credit spread. The reason being, I want it to expire worthless. I don't want to have to pay any fees when I exit. If I use calls, that could also work. Similar risk reward, you're just going to have fees. You have exercise fees, or if it gets exercised early, which is good, it gives you a full profit, you still have to pay contract fees. But by using a bull put credit spread, there are no fees. So I just save a little bit of money, get about 1% extra juice on the trades. And then just to repeat here, if I'm going at the money or out of the money, I'm going to use calls and then a debit. It's going to be the same mathematical risk to reward. However, if you were to use puts out of the money, there's a decent chance you would get exercised early, which is going to guarantee you a full loss, even if you have time left on the trade. We don't want to mess around with that. So we're going to use calls. So today, at the money, it just moved $1 on us. While I did that, we should have done the trade first. Of course, I can't predict where the price of gold is going to be in the next 5 minutes, but we're going to have to adjust our strikes one higher.
Are we up to
So
29 or 22nd of May?
up to 29, it looks like. Yep.
Okay.
So we're going to May 29th expiration. This gives us a full month, a little over a month. In this case, we need gold to gain about $1. So that's about a 0.25% increase, a little less than that, in the price of gold or more, and we should get around 100% return on investment. All right, I haven't done my wrap order training in a while. I know we get a lot of new faces. In fact, if you are newer here and you don't know what if you haven't been to the wrap order training, just give me a new in the chat, post new in the chat. I like to do that every now and then, so I have an idea of when I should run it back and cover that training again. Again, if you haven't seen it, we do have all of the recordings saved in the opening playbook. Wow, a lot of news. All of the recordings saved in the opening playbook members area. $1 gets you in for lifetime. There's no renewals, no hidden fees. We had to charge something to get it in the members area. Oh, thank you, David. David posted a link. It's $1. If you said new and you can afford $1, I would highly recommend getting the lifetime membership to opening playbook. All that does is get you access to the recordings, all of the trades we took, and a whole bunch more information, calculators, extra trainings. And once you do that, watch the wrap order training over the weekend. All right, I talked long enough where gold came down again. So that worked out good. Let's check out the prices here. Let me see what happens if I do this. Man, looks like market makers are pricing an increase in gold here. They're all showing. It's probably just because we're too early in the morning. All right. So what we're going to do, and again, this is going to be a call debit spread. So if you do the calls and it shows credit, you probably did it backwards. That's okay. Just flip it. What we're going to do is we're going to go to the 29th of May expiration on GLD, and we're going to buy the 434 call, and at the same time, sell the 435. It's a vertical spread, debit spread. Your goal is to get filled as close to 50 cents as possible or less. Right now it's showing 53 cents. Oh, there, now it's showing 50. And again, all we need in this instance is over the next, 35 days, GLD to gain $1, actually 80 cents. If GLD gains 80 cents or more, if it gets above 435 by expiration day, and you get filled at 50 cents, that's 100% return on investment. Price is moving around a bit. Guys, use a limit order. Try to set it as close to 50 cents as possible. I'm going for 10 contracts, which means I'm risking $500 to profit, to turn into 1,000. 500 to make 500. 1-to-1 risk to reward ratio. We do have a trade on the 22nd, PO. I think we did 2 last week because I was out.
Yeah, I was just typing that out. One was 15th and one was 22nd.
And they're on it. And honestly, I think gold went down this week, so it's probably it's a lot better than what we got. All right. So let me just show you on a chart here. GLD, obviously in a long-term bullish trend, had a little blip with the war, bouncing back now. I just need gold. Look at this. We can find 529. All right. Do you guys see my crosshairs here? That's how much I need gold to move. It can go all the way to 500 bucks, whatever. As long as it's above 435 by expiration date, it's 100% return on investment, assuming you're filled at 50 cents. If you're filled at 51 cents, it's going to be 98% and so on and so forth. Again, if you have the opening playbook membership, you can see all of this, or you can have the calculators in the members portal. So if you get 51 cents is a 96% return on investment, 52 cents, 92% return on investment. So again, that's why you want to get as close to 50 cents as possible.
It basically, I'll post last week's trade, David. It basically just needs to go to like not even the high of today.
Exactly. Yeah.
Like it just has to hiccup.
Yeah. Bob, I did not do a credit trade this week. I just did a wrap order. If you want to do a credit, you can probably trade these lows, 400 range. That might not pay very well. Somewhere in this range down here with the puts. put credit. Someone says it's at $1. It's at 53 cents right now. Now, 55 cents is about the most I'd pay for this. But again, start at 50 cents and then look to crawl your order higher if you want to from there to 51 cents, then 52 cents. But I really want to go above 55. Bob got in at 49 cents. Junebug got filled at 50 cents. I have not gotten filled yet. But I'll just do the cancel replace trick a few times. If that doesn't work, I'll crawl it higher. All right, in other news, I did post in Telegram. If you're not in Telegram, hopefully you join. It's free as a bean. I don't know if beans are free, so maybe it's not. Maybe it's
Never heard
freer
that
than
one
a bean.
before.
I did something crazy yesterday. I am currently down about $5,000 on it. But I did take some speculative. I said high volatility, not safe. I tried to say it like 3 times in here. It could get ugly fast. Just to let you guys know, these are not safe picks, but I'm going for this melt up in May based on all of our data. Here are some of the names I took. You can see how much I personally put in each of them. And it could get ugly fast, so I don't recommend you do this with your life savings. I'm doing this in my retirement account. I have one that I contributed like up to 60 grand into, and then I switched plans, so I can't contribute it to anymore. So I've just gone crazy trying to grow it as fast as I can. Is at 240. So awesome returns. I'm going for the next leg up. It could totally blow up in my face. But if we do get this next run going into May, through the month of May, these are the names that I believe will benefit the most. So if you missed that in Telegram, go back, look. I posted yesterday at 11. These are just underlying stocks, Rangeley. Underlying stocks. And the reason is these are very speculative names. They move 5-10% a day. So I don't really need to trade options on them to get outsized returns. For example, like iron very easily in the past has gone up 100% in under a month on the underlying stock. Keel has gone up. It's formerly BITF. If you guys remember BITF, rebranded to Keel. That one's moved like 200% in a month. So because they are such fast moving names, I just go with the underlying. All right, I'm done with my spiel there. We've got some important training to cover. I think I went about 10 minutes too long.
You're fine.
Make sure you guys stick around, especially if you said new, or if you are newer, or if you're newer to trading options. If you've just started the last 6 months or so, you're definitely going to want to pay attention to this.
Yeah, we're going to talk about we've done a lot of trading recently with condors and reverse condors, box trades, two-way trades. A lot of different terms get thrown around, and there's been some confusion as to do we want it inside the box, do we want it outside the box? How do we know, like where we win, where we lose, that kind of thing. So I want to go over that stuff with you guys now. So we're going to talk about 2 different kinds of trades. We talk about what we call a box trade, which is technically known as an iron condor. And that's what it'll be listed as inside your broker platform. When we talk about an iron condor, we're talking about a combination of 2 vertical spreads, a call spread at the top and a vertical put spread at the bottom. And we'll see that graphically in a minute. So if that doesn't make sense to you in words, don't worry about it. But what we're looking for when we do an iron condor, and the reason we call it a box trade, is because we're looking for a profit zone in between those 2 spreads, in between the call spread and the put spread. So we'll see that graphically. But here is the kind of definition of it, where we're using the same ticker for both spreads. We're doing 1 call spread and one put spread. They both, or all 4 strikes, have the same expiration date. And we're using 4 different strike prices. So they're all going to expire on the same day, but they all have different strike prices. So this is an example of what that looks like. If we're looking at ticker IWM, we're going to buy a call at 263, just a random example. We're going to sell a call at 262. We're going to sell another call down at 253, and we're going to buy, a put at 253, and we're going to buy a put at 252. So the way this works, and this can get, confusing, and I get that. Let me grab my little drawing tool here. So what I like to do to figure out like where do we want the underlying stock, or in this case IWM index, whatever, ETF to go. Do we want it, below 252? Do we want it between 252, 253, 253, 262? Where do we want it? So whenever I'm doing vertical spreads, and this is basically two vertical spreads, right? So this is one vertical spread, this is another vertical spread. This is calls, this is puts. If you draw a line from the buy to the sell as an arrow, you draw a line from the buy to the sell as an arrow, that tells you what direction you want the underlying asset, IWM, to go. So we want it to go from 252, 253. We want it to go higher than 253. And in this case, 263 to 2 down to 262. We want it to go lower than 262. We want it to go in this direction from here and this direction from here. And this is where we get our box. So we want it to be between 253 and 252. This is our target area, right? This is the target that we want for IWM in this example of where we want it to go. So we're going to use an iron condor or a box trade when we feel like we know that, we typically do it when IWM is in here somewhere, right? We don't typically get into this trade when IWM is up here or up or down here. We usually do it when the stock is in here, and we feel like it might make a little move up, it might make a little move down, but overall it's going to stay relatively flat. And so we're going to box it in here. So if we feel like something's going to be relatively flat, there are definitely multiple ways we could trade it. We look at butterflies like we did yesterday in closing playbook. If we feel like we're going to pin it straight to where we think it's going to stay flat or think it's going to end. But if we don't have an exact idea of where we think it's going to end, then one of the plays we could make is an iron condor, or also known as a box trade, where we could draw this box and say, we think it's going to stay within this box. We're going to sell a call at the top of the box, sell a put at the bottom of the box, and then hedge those with buying calls and puts to reduce our risk, to reduce the cost of this. And this actually winds up giving us a credit. This will wind up being a credit spread because what we're selling is more valuable than what we're buying. So we're buying against it, but we'll wind up selling and getting more than we're buying. So it'll wind up being a credit spread. So let me clear this and we'll move on to the next slide. Whoops. All right, so this gives us a good idea also of what's going on here. Let's see here. So if this is where the stock is right now, let's say 258, it's not where IWM is at the moment, but it's 258, and we think it's going to stay within this box, where this blue line is, or where this green box is, we think it's going to stay within here. Same numbers as before. We think it's going to stay below 262 and above 253. Instead of buying a call down here and selling a put up here, or buying a put up here, we can make this into a credit spread. We can reduce our risk greatly by doing these spreads. So we do the vertical spread up here, where we buy the top call, sell the bottom call, which forces our green zone downward. And we buy the 252 and sell the 253, which forces our green zone upward. And so we have this box, this green box in the middle, that's our max profit zone. If it expires, if this iron condor with these four legs, right, two calls, two puts, all one trade, if that expires between, below 262, above 253, we make our max profit, which would be the dollar, the 263 minus 262, that dollar minus whatever, or actually it would be whatever credit we got for it. And this is a credit spread. So it would be whatever credit we got for it when we got in the trade. We would keep that whole credit if it expires in here, because then this would be worthless and we wouldn't have to buy anything back. So we get a certain amount of credit when we get into the spread. And if it expires in this green zone, we just keep the whole amount that we got as a credit. Now, if it expires between 262 and 263, which is this yellow zone, if it expires in here, or it's two yellow zones, or in here, then we will make a partial profit or a partial loss depending upon how much credit we got when we got in, where between 252, 253, or 262, 263 it expires, how much time, and if we get out of it before expiration, then it depends on how much time is left on it. But basically, in this yellow zone, it's going to be a partial win or a partial loss. And then if it expires above 263 or below 252, we're going to just lose the full amount, which would be the dollar with here minus whatever credit we got. So let's say let me do this in a different color so you can see it a little better. Let's say we got a credit of 25 cents. Oops, I'm not great at the drawing. Let's say we got a credit at, let me undo that. Hold on. Let's say we got a credit of 25 cents. If we expire in the green zone, we're going to make the 25 cents. If we expire in the yellow zone, we're going to make somewhere between 25 cents and losing 75 cents, somewhere in there. And if we expire, so in the yellow zone, we would be, let's 4 cents to a negative 74 cents, right? And then in the red zone, we would be at a negative 75 cents. Where'd I get to 75? Oh, my sevens keep looking like twos. Where'd I get to 75? Because it's a dollar with here minus the credit we got when we got in. So we could lose 75 cents on this. So the yellow zone is a partial, the red is a complete loss, the green box in the middle is a complete win. So let me clear this, and then we'll go here. This is what it would look like to do an iron condor inside your brokerage platform. So this happens to be what it looks like in Thinkorswim. Not every brokerage looks exactly the same, but they're pretty similar. Most of them have a preset for iron condor to pick your options, so you can let it do that and then just change the different strikes. But we are buying the 263 call and selling the 262 call. We're buying the 252 put and selling the 253 put, kind of pointing things toward the middle. As I said, it's a credit spread, which means we get a certain amount when we get in. And then our risk is the difference between that and the width of the spreads. So in this case, both spreads are a dollar, which they typically are the same in an iron condor. And then that dollar minus the 65 cents is your risk per option, and then times 100, because we always have to do options and contracts of 100. So this would give you $65 cash in your account when you got in this trade, but that $65 cash would be held, and an additional, I don't know if I said 45, but additional 35 cents would be also held, because that's your risk on the trade is 35 cents. So a dollar minus 65 is your risk. So if you start out with, let's say, $1,000 in your account, when you got into this trade, you would have 1,065, but you would only have $965 in usable buying power, because they would freeze the 65 they gave you and the 35 additional risk that you have. Sharon, so yeah, let me get here and go to questions. Let's see here. What's the exit on the gold trade, Brad? We hold those at least until the week of expiration on the gold trades, and we typically don't get out of them before like Wednesday, 2 days before expiration, to really know whether we have a chance of winning or not. Graham will typically say, "Hey, I'm getting out of the gold trade," like on a Wednesday or a Thursday, if it just looks like we're just mitigating the loss at that point. But we typically hold it all the way to to that expiration week at least. Uh, Morgan, this is something that we've reviewed before, but I'm reviewing the iron condors and the reverse iron condors again because we have a lot of new people and people asking about it. So we have gone over this before, but I'm happy to do it again for those who haven't seen it or need to see it again. How did I get the green area support and resistance level? So how we get it is a different conversation, Dash. How we get those support levels, like how we decide that it's going to be, 262 and 253, that's a different story. Typically, it could be it could be support and resistance. It's usually more about a market maker move. The way we trade, it's typically more about how much do we expect it to move in the period of time between now and either the expiration of our options or when we plan to get out of it, if we plan to get out of it early. So it could be support and resistance, or it could be market maker move or average, what we call ATR, right? So the average move that it makes in the period of time that we're looking to trade it. That's typically what we're looking at. How much now, again, if there are other factors that might say, okay, well, it's got a certain average move, but if it's got earnings or news coming out, that could affect things. There are a lot of things that could make it, could help decide what it is. But those are generally the two things: either a level that's typically support or resistance, or some kind of market maker move or average move that we expect it to make. Sharon, an iron condor, a what I would call traditional iron condor, is always a credit spread because you're using two calls at the top and two puts at the bottom. If we did this all with calls or all with puts, then we could make it either a credit spread or a debit spread, but then it wouldn't really be called an iron condor. It would basically be like a long call butterfly or a long put butterfly, or just a regular condor. Actually, the butterfly is if the strikes in the middle are the same strike. It would be just basically like a long, like a call condor or a put condor, not an iron condor, if you want the naming convention. But so it depends. Some people will use iron condor in all the cases, not really knowing that there's a difference between an iron condor and a call condor and a put condor. But the iron basically tells you it's a combination of calls and puts. So therefore, in this case, it's going to be a credit spread. When we look at the reverse iron condor, it's going to always be a debit spread if it's in fact an iron condor and not a reverse call or reverse put. So, all right. Yes, Terrence, we're going to go into reverse condor right after this. Yes, when to get out of an iron condor is important. So let's talk about that real quick. So when we talk about managing the exits, I did write that in here. Between the two spreads is the max profit zone. You can just let it expire if it's in the green zone. Between the two calls, that's your yellow zone at the top, and between the two puts, that's your yellow zone at the bottom, is your partial win-loss. We covered that. What I didn't say out loud is you don't want the options to expire here because you risk getting assigned, particularly on the puts, you risk getting assigned, or you risk automatic exercising of your calls. What you want, if it's going to be between the two strikes, if it's going to expire in the yellow zone, it's okay if you close it manually in the yellow zone, but if it's going to expire in the yellow zone, then you want to manually close it before expiration. So if today's expiration day, like if these are expiring today, and it gets to 2 p.m., 3 p.m., and it looks like it's just never going to make it out of this 262, 263 zone or 252 to 253 zone, I'm just going to manually close it at the end of the day before it expires. Now, I will warn you that some brokers are a little bit jumpier than that. Robinhood in particular, you need to look a day early, and you need to make that prediction a day early because Robinhood is pretty well known at this point amongst our group here for exercising you early on this kind of thing. So if you're taking this trade 3 weeks out, if your expiration is 3 weeks out and you come to the day before expiration day and it just looks like it's in a stale sideways pattern, and it's just chopping between in the yellow zone at the bottom or in the yellow zone at the top, I would just close it for a partial, a partial win or slight loss if you're using Robinhood. And then if it's in the red zone, you can just let it expire also, because it's just going to be a complete loss, and it doesn't, you don't have to worry about assignment or anything like that. So the only time you need to close this manually is if you're approaching expiration in that yellow zone at the top or yellow zone at the bottom. Let's see. Uh, is that bar of green, yellow? No, this is not actually happening on my Thinkorswim. I drew this for you, but you can see it in option strat. So if you go to option strat, I'll type that out for you here. This is a free site that we use all the time to visually see our trades. If you go to optionstrat.com and you go to build at the top and then you select Iron Condor, you can build this trade out in option strat. I'm not going to take the time to do it now because we're kind of limited and I want to on time and I want to be able to do the reverse Iron Condor for you guys. But you can easily kind of visualize your profit and loss zones in option strat. And unless you're trying to get into a trade that's moving super fast, that's a great thing to do for all your trades is go to option strat, put the trade in. You can build any kind of trade in there. And you can see, okay, where's my break even on the bottom? Where's my break even on the top? And where's my profit zone? Where's my loss zone? It's a great tool and it's free. Let's see. All right, I think that's all the questions we have on that. So let's get into a reverse Iron Condor. Now, in some platforms, including Thinkorswim, it doesn't say reverse Iron Condor. They only give you the option for Iron Condor. And then you have to kind of flip around what you're buying and what you're selling inside the trade builder. So in other platforms like Tasty Trade, I know you can say reverse and it'll automatically flip it for you. So it just depends on what platform you're in, whether they have one called a reverse Iron Condor, but that is this is a standard naming for it, is that it's a reverse Iron Condor. What we tend to call it is a two-way trade because what we're doing here is we're setting two profit zones, one above the higher strike and one below the lower strike. So all four of these facts, these blue and green boxes, these are all exactly the same as the Iron Condor. It's the same ticker, same expiration. We're doing one call spread, one put spread, and all four strikes are different. These four things are exactly the same as a regular Iron Condor. The difference is which ones we're selling and which ones we're buying. So here I didn't change these strike prices to match the chart, but you can see that what we have here is a different direction. We have the buy to the sell arrow that I told you to draw is going up on this one, and the buy to the sell arrow I told you to draw is going down on this one. This is still a vertical. This is still a vertical. This is still calls. This is still puts. The difference is which one we're buying and which one we're selling, right? We're selling, in this case, the high call and the low put. So the arrows go the other way. So what we want is we want the stock price to be above 280 and below 220, not in the middle. All right. So that's why we, in some ways, why we call it a reverse. We've reversed the direction that we want the stock to go. So typically, again, we would do it with the stock somewhere in this middle zone, but we are expecting a large move up or a large move down, not staying in the middle somewhere. So again, if we have a stock that's right here, which we had in both cases, we want, if we sell the higher call, we're going for a high move. If we sell the lower of the two calls, we're going for a small move. Hopefully that makes sense. So let's clear this and then talk about the chart. So this chart's going to look very similar, right? What we have here is the same stock level we had before. we have essentially the same boxes we had before, except that the colors are different. And you'll notice the blue arrow is stretching not up to the green, not up to the lower strike here, but above and beyond the upper strike here. So again, this is our vertical. This is our vertical that we're putting all together into one trade, one four-leg trade. And what we have here is this inside box is now red because between these two spreads, which again, if we draw the arrow from the buy to the call, we want it to go above that zone. And if we draw from the buy to the sell, we want it to go below that zone. So this zone in the middle is our full loss zone. The zone between the two calls and the zone between the two puts is still our yellow zone. That part didn't change. And then we have a green zone from 263 all the way as high as math can go. And we have a green zone from 252 down all the way to 0. So what we're looking for here is that it's going to make a big move up or a big move down. We don't want it to stay in the middle. So again, this would be kind of the opposite scenario where you feel like instead of saying we're going to box it in because we feel like it's going to make a limited movement within a range, here we're saying we don't know which direction. This is why we call it a two-way trade. We don't know which direction it's going to go, but we expect a big move. Why do we expect a big move? Well, earnings would be a good example, right? If we know that a stock typically has a big reaction every time earnings come out, but we don't know whether it's going to be positive or negative, a reverse iron condor is a great way to trade that. There are a lot of reasons why we might think that something's going to have an outsized move. If you look at something like Chris Pulver's pinch point, right? If we see a stock that kind of goes like this, and then like this, and then like this, where the highs are getting lower and the lows are getting higher, and it's kind of, sorry, let me undo that. And it's kind of pinching narrower and narrower. Eventually, this typically leads to an outsized breakout. So it could be that there are no earnings or news or anything like that coming out. It could just be a technical pattern that we see where we expect a breakout. So there are a number of reasons why we might think it's going to go up or down. Again, the reasoning that we pick these strikes and these levels is kind of a separate lesson. But the point being, why would we use this or when would we use this? It's when we think it's going to make an outsized move, but we can't pick it directionally. We don't know which direction it's going to go. If we thought it was going to go bullish in a big way, we would just take this spread. Or if we thought it was going to be bearish in a big way, we would just take this spread. But if we don't know, we can do the combination of the two in one trade as a reverse iron condor. And then either way it goes, we will profit enough to cover the loss of the one that loses. So the idea here is we are only going to win this one or this one. We can't win both, right? It can't expire here and here. So we're only going to win one. But when you build it as one trade, you can see exactly what your total cost is for the two spreads and what your risk, your risk and your reward are, to see that you will net out ahead if it is profitable in one of these two zones. And this will always be a debit spread. Let's see that now in the platform. If you do it as a traditional iron condor, meaning calls at the top, puts at the bottom, you will see this will always be a debit spread. We're, again, buying the 262, selling the 263, buying the 253, selling the 252, calls at the top, puts at the bottom. See, it says iron condor here in Thinkorswim. It doesn't say reverse, but in other platforms it can. And it's a debit here. Now, you'll notice, if you recall, these are different like spreads and stuff. I was doing these at different times, so don't like wrap your head around, this was 66-cent debit, the other one was a 65-cent credit. That doesn't math out. These weren't done at the same time, so don't compare this debit to the other credit. Just consider the fact that this is a $1 wide, and we're paying a 66 cent debit. So um, on the math of that, we are we're doing a debit of 65 or 66 cents. If it expires in the green zone, we did a debit, a minus 66 to get in. In the green zone, we would get $1 because of this width, minus the 66 cents we paid to get in, and our profit would be 34 cents. In the yellow zone, we would be somewhere between a plus 34 cents, so let's say plus 33 cents, to a minus 65 cents loss. And then in the red zone, our max loss is the 66 cents we paid to get in. So on a debit spread, it's very easy to know what your risk is. It's always your debit, right? On an iron condor, your risk is always your debit. I mean, I shouldn't say that that's not true of every debit spread. I mean, every debit trade. That's not true of every debit trade. It's true of every debit iron condor, right? Every debit iron condor, your risk is your debit. So the uh, the range is here, and then I didn't talk about managing the exits while I was on that other slide. So let me go back to that. So again, between the two spreads, in the red zone, you can let it expire. In the green zones, you can let it expire. In the yellow zones, you want to get out before expiration. All right. Let me see if we have any questions. Morgan, when you say you have to build it in your own platform, are you talking about option strat? You then have to build it in your own platform. It doesn't go, yeah, option strat is just a visual tool. It doesn't help you actually execute the trade. It's just a visual tool. So then you have to build it in your, I mean, I can show you at the moment I have Tasty Trade open, so I can show you what it looks like in Tasty Trade. I don't have Thinkorswim open. I don't want to take the time, but I can show you what it looks like in Tasty Trade. Let me share that screen. Hold on a sec. It's just refreshing. Hold on. Or actually, if I do a small area, it'll be easier to see. It'll be bigger. Give me 1 second. I don't know the derivation of iron condor. I don't know where the name came from. Sorry, give me 1 second. I'm trying to get this to a size you'll be able to see it. And my computer's going nice and slow right now. Super slow. All right. So if we look at Tasty Trade, hopefully you can see this. This happens to be XSP, but here in Tasty Trade at the top, you can pick your option builder and you've got Iron Condor. Now in Thinkorswim, you don't have this reverse normal button, but you do in Tasty Trade. So when I select that, it's going to automatically just pick at the money, roughly at the money Iron Condor. So it's going to show that we're buying and selling puts and we're buying and selling uh, calls, and you're going to see it down here as two puts, two calls, two buys, two sells, and then you're going to have a net debit. So I'm not sure what else you might have wanted to see in the platform, but that's what it looks like. Let me see what other questions popped up. Morgan, I'm not sure exactly what you're looking at, so it's going to be hard for me to answer your question, but I can show you what option strat looks like if you want. We have just a couple of minutes here. Let me see if there are other questions. Bobby, I'm not sure where I mean, last Friday's gold trade is not expiring till May 15th or 22nd. If you're talking about the one that expires today, I'm not sure where that one's at. Do you ever leg out of a reverse iron condor? I mean, maybe some people do. We generally don't. It's a fairly advanced thing to do. Um, I don't have an answer for you on that one. That's you could probably ask if you ask our 14 different traders, you probably get several different answers. So I'm not gonna. I would say in general, don't plan on it. There may be circumstances where it's smart, but you kind of have to know what you're doing. Um, so if we go in here and we build an iron condor, right, or an inverse, here they call it inverse rather than reverse. If you call it inverse iron condor, then these are your two buy strikes at the top. These are your two sell strikes at the bottom. So again, you can move these around and see, again, with an iron condor, our win zones and loss zones are on the outside, right? They're top and bottom. We lose in the middle. We have a little bit of a yellow zone around our break even, and then we win at the low extreme or the high extreme. So here you can see where these lines are. And if you move these around, you can see, you can visualize your trade so that you can pick your strikes and see, okay, I wanted more of a green zone, a tighter loss zone. It's going to cost me 103. My max profit is $97, so I'm making a little bit less than 100%. Of course, if I get really nice and green with it, right? Who wouldn't love that? But now I'm spending 243 to make 157. I'm only making, let's say, 60%. So, you know, obviously as you make it a more and more favorable trade, it's going to pay less and less. So, but you can visualize your trade here, and this is a horizontal representation of that same thing that I showed you vertically with the red zone in the middle and the yellow zones after that, and then the green zones on the outside. This is just a horizontal representation of what I was showing you vertically on the Thinkorswim chart. All right, let's see. On the gold trade, do we want to place an exit trade? No. Generally, again, what you do with it is up to you. We're not going to tell you how to manage it other than telling you how Graham would manage it, which is that he holds them till expiration or at least a couple of days before expiration. Is this on all pages on the order page of Tasty or all of so on the Tasty trade, this is this is the trade tab right here. This is trading at the top and trade on the left. You get your options. So if you don't see this options chain, right? If you're seeing this, oh, you can't buy shares of XSP, so that's a bad example. If you're seeing this, right? Um, where it's like a chart and you just have your builder down here, it's probably because you have it on shares and not options. If you go to options, you'll see your option chain. The first thing you want to do is pick your expiration date of your options. And then you can go up here and click on it to pick your spread for you. It's a little different in Thinkorswim and other platforms, but overall, same general principle. Okay. All right, folks. That is the lesson there. Now, if you like the idea of these two-way trades where we we can go in either direction as long as we expect it to make a significant move, but we don't know which direction, we can actually win whether it makes that significant move up or significant move down. Nathan has a strategy called two-way trades just for that purpose. And we're going to play the presentation right now on that. Actually, I forgot to share my sound, so give me a second here and share that again. And you'll have an opportunity to see how that program trades as well as get into that two-way options trading program yourself. Where'd it go? All right, check this out.
Mandatory disclosure. This is mandatory and it's important. The profits and performance shown are not typical to any one individual subscriber. We make no future earnings claims and you may lose money. Every example you will see today was from.
Well, I don't know why we're getting Inception here. Hold on. Sorry. One more time.
Live, real trade signals sent out in real time to traders just like you. No curve, fit, back test, no monkey business. Now, from July 2024 through January 2025, from the live trades, we've seen an 85% win rate. That is amazing right there. And this is on options, which is even harder to do, which is why I'm more impressed with this. Average winner of 42% and an average return of winners and losers combined 25.3% over a 7-day holding period in the live model. Wow, the numbers here are fantastic. But we can't guarantee any specific future results as there's always a high degree of risk involved in trading. See our terms on the Prosperity Pub homepage for more information. Now, let's be real. In trading, there will be losers. There is no black box miracle system that prints out winning trades automatically. And the whole purpose of Nate's research and work with traders is to help give you an edge in the markets. If you can't handle a losing trade, then you really shouldn't be trading with real money again. Losses in trading have occurred and will occur in the future. Hi, everybody. I'm Jack Carter. Thank you for being here today. You have arrived at an opportunistic time. Now, all week long, we've been asking folks a very simple question. Where will the stock market finish in 2025? Higher? Lower? Well, out of 2,740 of you that responded to this question, almost 80% said higher, around 20% said lower. Now, what about those in the webinar right now? Post your answer in the chat. Are we going to be higher at the end of the year or lower? You already know what I think. We're going to be higher. Now, maybe you have renewed hope in our government officials. Type in higher or lower. Maybe you're confident in AI to take us to the next level, or maybe just the opposite. You might be worried about a second wave of inflation that doesn't stop, like in the 70s, causing an incredibly painful next few years. Or maybe you're concerned we're seeing the excess froth at the final peak of yet another massive market bubble like the dot-com crash. People say that. Now, regardless of who you are or where you stand, I think we can all agree. In this day and age, no one really knows where the market will finish the year, not with 100% certainty. Week to week, it feels like a guessing game. That's what it seems like. There's the post right there. Fill it out. And that's why we're having a special broadcast today. In the next few minutes, my special guest and I will be unlocking what we're calling two-way options. And it's a brand new way of trading that allows us to profit no matter if the markets fall or head higher. And all we really need is for the market to move. And that's what it's doing. Now, as you can imagine, With all the volatility we've been seeing lately, the trade results have been exceptional, even in the midst of the economic and political chaos. As a matter of fact, over the last 6 months of beta testing, the live trade signals with folks just like you, so far, these two-way options have shown the power to grow an account by 25% per week. Just facts. Now look at this. With an 85% win rate on all the live published trade alerts so far. This is amazing. Pretty good, right? I think it's great. But get this. On July 3rd, 2024, my guest first shared this new way of trading with his beta testers. And since the market has experienced 4 major pullbacks and 3 rallies, not great. Yet the two-way options have won all but 3 trades right there. Now look at this. When you got 17 winners out of 20 trades, you know what you're doing. He knows what he's doing. And that includes hits like 72%, 85%, and 108% during some of the worst market drops, which is why it's so important to win both ways in this market. Now, obviously, with returns like that, we're talking about real results that can truly stack up over time. For anyone who started with just, let's say, 5K, we're looking at a $25,265 income opportunity from live trade signals in only 6 months. No hypothetical historical data, no back testing, no playing with the numbers, no manipulation, just real trade alerts sent in real time. And that's why I invited you to today's session. You see, with the increased volatility and uncertainty on the horizon, the timing is perfect. It couldn't be better. Because as of this moment, the ideal setup for the two-way options is taking shape once again right now. And if things play out as expected, we'll be targeting our 18th win early next week. Amazing. And we'd love for you to be a part of it. That'd be even more amazing. Now, the man behind these two-way options, he may be cute, but he's no dumb cookie. He's no rookie when it comes to trading. His name is Nate Tucci. Now, you might know Nate as one of the fastest rising financial superstars under the age of 40, and he's already been able to accomplish some pretty incredible feats, including publicly growing a 10,000 stake to north of 50,000 over the course of 4 months, and showing countless folks how to hit some serious milestones in their trading across his programs, like Beverly P., who said, "I'm up 6,000 since August 1st. Wow. Roger S., I'm up 15,770 after the first 8 trades, starting with 5K. And then Deborah says, "Nate, I want to thank you for the